Welcome to Nasdaq TradeTalks. I'm Jill Malandrino, Global Markets Reporter at Nasdaq. Joining us for this segment, we have Mark Marex, Director of Index Research and Development at Nasdaq Investment Intelligence, to discuss year-to-date semiconductor performance and companies that are seeing positive impact from the emergence of the AI theme. Mark, it's great to see you as always. Welcome back to Trade Talks, and let's kick this off with a widely known index, the SOX, that of course the Philex Semiconductor Sector Index. Give us some background there.
Sure, Jill. Great to be here with you again. And yes, the SOX has been around for over 30 years already, if you can believe it. I think it's really earned its place as the industry-leading benchmark for the semiconductor space. It tracks the 30 largest U.S.-listed semiconductor companies. So not necessarily all the big global names, but those that have listings in the U.S., whether they're U.S. companies or just have additional listings in the US, they can make it into this index. From a concentration perspective, you can see the top 10 make about 60% of the index weight. This is a modified market cap weighted index with 8 and 4 capping. So basically the top 5 names get capped at 8% each. The rest get capped at 4%. So if you look on the right, the top 10 index weights, you can see the 5 biggest names are by far the biggest: NVIDIA, Broadcom, Intel, Texas Instruments, and AMD, and then you've got the tail there with NXP, Qualcomm, Lam, KLA, and Applied Materials.
And let's break it down further and take a look at how it's made up by market cap, subsector, and globality.
Yeah, so starting off with market cap, you can see the $100 billion plus sleeve here for market cap is almost 60% of the index weight. This has really become a mega cap dominated space in a way that it didn't used to be. For the longest time, Intel was really the single biggest player by far in terms of market cap, and most other players were quite a bit smaller at under 100 billion. But that's changed as semiconductors have really started to penetrate a lot of other devices, a lot of other sectors beyond just simply computers. And you've got the likes of NVIDIA now, which was the first semiconductor company in the history of the industry to crack $1 trillion market cap a little bit earlier this year. So very, very much a kind of mega cap dominated space at this point. In terms of subsector, you've got sort of an 80-20 split between sort of semiconductor designers and manufacturers. And then the 20% comes from the production technology equipment makers, those manufacturers of some of that testing and assembly equipment that the other firms use to design and build around. And then from a geographic perspective, like I said, it's US listed companies, but we do include international companies that have US listings. So Taiwan is up there by virtue of Taiwan Semiconductor Manufacturing, having an ADR in the US. That gives you an exposure of about 3.5%. And then 8% comes from the Netherlands, from the likes of ASML and NXP.
And Mark, we know that many semiconductor companies have had a fabulous 2023, but if you look at the index overall relative to its benchmarks, how has it performed so far this year?
Yeah, I mean, it's been really strong, right? You have the NDX, the Nasdaq 100 here, up about 38% year to date. These numbers are through Friday's close. And then you've got the S&P 500, having a pretty good year, up about 15.5%. But trailing the Nasdaq 100 pretty starkly, right? If you look at SOX, that's the leader on this page, up about 40% year to date. And then the green that I've highlighted there, NQ Intel, that is the Nasdaq CTA AI index, which tracks companies that are materially exposed to the theme of artificial intelligence. And maybe it's a surprise, maybe it's not a surprise. You can see that sort of all 3 of those, SOX, NDX, and NQ Intel, have tracked each other pretty closely all year, as you've got sort of overlapping exposures across the 3 in many different companies and in many different ways.
Let's talk about the performance of the top 10 constituents. And I think this is an interesting chart that you provided, Mark, because you have 2021 returns, 2022, and 2023. We know 2021 was a strong year for them. Most of the Nasdaq 100 got beat up in 2022, but when you look at the 2023 and start thinking about valuations, some of them aren't necessarily where they were in 2021. So that makes an interesting valuation story.
Yeah, for sure. I mean, the ones I've highlighted here, right? NVIDIA, they've really been stealing the show all year. They're up. This is through end of July. They were up a little under 200% year to date through there. I'm checking it today. They're up already 235% year to date. So NVIDIA absolutely is at all-time new highs. That's by virtue of the fact that, depending on who you ask, they have something like 75 to maybe even as much as a 90% share of the market for AI computing chips, graphics processor units that are specifically designed to train AI models and then do the ongoing compute to run those models. So they've just had, maybe the best year of any company since Google, since they IPO'd, in terms of revising their forward-looking estimates. In late May of this year, when they reported 1Q earnings, they upped their quarterly guidance by about 50% in terms of revenue. That was for the most recent quarter where they reported about a week ago. They blew past those estimates and revised guidance up yet again for next quarter. So AI, in terms of the incremental spend on semiconductors, the clearest story there is definitely NVIDIA. They are showing us quarter after quarter that the demand for those chips is pretty much so fast and so sharp that it's impossible to keep up with the constantly revising estimates from them and from analysts who track the theme. AMD, the other one that I've highlighted here, though, does deserve a call out. They're up 76% year to date. They are pretty much positioned, I think, in the number 2 slot to potentially steal some share from NVIDIA in the coming years as they build out their graphics processing unit platform to handle some of those AI workloads. But there's some other names in here too. In the second position there, Broadcom has really gotten investors' attention with sort of citing some of the additional areas of semiconductor spend related to AI. You think about there are chips specific to doing the AI compute, but as you're doing more and more of the compute, you need a whole lot of other resources in terms of memory. There are semiconductors specific to memory, in terms of power management, in terms of a lot of different areas where, okay, maybe the highest value add is NVIDIA and to a lesser extent AMD, but a lot of these firms are also going to see higher demand for sort of the lower level, lower end processors and chips that you simply need to be able to run a massive server farm or a data center or something like that. So you're seeing pretty much all of these names having a pretty good year to date after all of them being down last year, and last year was definitely a year to forget in terms of returns for this sector.
All right, Mark, in the last minute here, let's break it down by industry.
Yeah, so this shows you courtesy of IDC, which is sort of the standard for tracking and forecasting estimates for the global semiconductor industry. You can see we've been on a really, really impressive upward slope. Back in 2009, globally, a little over 200 billion in semiconductor revenue. 2021, 2022, we were almost at 600 billion. This year, we're not going to be quite as high. We're tracking around 550 billion. And that is a pretty significant drop. And that is really driven by the fact that we had this wave in spending on PCs and smartphones, tablets, gaming systems during COVID. A lot of that demand was brought forward in 21 and 2022. We're working through some of that bringing forward of demand. And we do expect a really solid rebound next year, exceeding 600 billion and then growing in total over the next 5 years by 37% to about 750 billion for this industry by 2027. So bit of a step back this year. That's why you saw the weak performance last year, kind of anticipating that pause, that step back for the industry. But things are recovering. They're going to continue to recover, and AI is just a massive new secular growth driver, not just this year and next, but for the coming, I would say, at least 5 to 10 years.
All right, Mark, appreciate the insight as always. Thanks for joining us on Trade Talks. I'm Jill Malandrino, Global Markets Reporter at Nasdaq.